Hello, fellow virtual investors. Want to go over student loan debt. I was watching Fox News this morning and I saw the average student loan debt was $28,650, and that's from 2017, according to the New York Federal Reserve. That number also is reportedly low. They did say it could be as high as 34, potentially even more. And I would lean towards the more. When I graduated in 1990 from Drexel University, I had 36,000 student loan debt coming out. I was an independent student. I did pay for it myself. Um, but still, it was only 20,000 a year to go there then. It's now 68,000 a year to go there. So you're talking more than triple the amount 20 years later. It's a I'm imagining it's going to be greater than this amount we're seeing here. And here's an interesting part of it too: is college really worth the investment? Only 4 out of the 10 college graduates, 4 out of 10, are using their degree on a job that requires one. So that's pretty interesting. And I'm one of them that falls into that 4 out of 10 because I'm doing real estate investing. Doesn't require a degree. Could have done it straight out of high school. So that's something that's pretty important. And when people are thinking about putting your kids to college, if you're planning on wanting your kids to take over your business or take getting into real estate or something that doesn't require a degree, why send them? Why waste the money? Why give the money to these colleges who are just charging the heck out of us like crazy, overcharging us by a lot? And I don't feel that you're getting anywhere near what you deserve out of a college experience. All right. Now I get off that tirade. We'll get into renters versus homeowners. There's potential to be more renters than homeowners down the road here when you include millennials and Generation Z. They want to be, both those generations want to be more mobile and aren't interested in working one job for 20, 30, 40 years like our parents did or grandparents did. So that's something that's pretty important when you're thinking about it. So if you want to be mobile, you want to be renting. You don't want to be owning a home necessarily because you don't want to constantly be worrying about buying and selling. It's much easier to just rent. So which means maybe rental values will go up and real estate won't go up quite as much in comparison to that. We'll see. We'll see. Anyway, adding to debt, student loan debt is already bad enough. The average auto car loan just hit a high of $32,187. That's pretty high. That's for a new car loan. I think the average on a used was 20 and change. Still pretty high. So when you start adding 32,000, you start adding 30 some thousand student loan debt, it gets really hard to qualify for a mortgage. And this is according to Freddie Mac, 70% of renters believe renting is more affordable than owning. That's up 11% from February of 2018. So that's a pretty big increase, going from 66 to 78%. Pretty big, pretty stunning. So that's why you're seeing more renters. That's why you're seeing less rental availability. When I go out there and I look and I'm pulling things on Rent-A-Meter or Zillow, pulling these companies, just not finding a ton of rentals out there anymore because they're going off the market so quick. And give you a prime example, I had a property on the market in near where I am outside of Philadelphia in the suburbs, and I was trying to sell it, and somebody came in and I'm trying to get 50 plus thousand selling this property. But if somebody came along and was willing to rent it for a certain amount, I was willing to take that. And that certain amount was $1,400 a month. So I'm getting $1,400 a month on a property I'm into for $85,000. So pretty good return there. And that's something that 1,400, I would only been able to get about 1,200 a year and a half ago. So that tells you what the rental market is doing in different parts of the country, obviously. So that's an important tidbit and something important to remember. So right now we have 1.52 trillion in student loan debt. We have 8.8 trillion in mortgage debt, so just give you a comparison there, and 1.22 trillion in car loan debt. So that car loan and that student loan debt's adding up to quite a bit. Student loan delinquency rate is 11.2%. That's 90 plus days delinquent, easy for me to say. And the average monthly payment of a student loan is $351 that's for borrowers aged 20 to 30. And that'll continue to go up at different age groups here. All right, how to invest in this market. Timing's obviously important when you're looking at housing in general and looking at what kind of market you're going into. And I'm looking at doing more buy and hold. And I was not a big buy and hold guy, as a lot of you know, but I am becoming a buy and hold guy, just looking at long-term low interest rates, somebody else paying my mortgage for me, interest rates staying fixed at a low rate, building equity without doing anything, and little expenses, hopefully minimal expenses. And the houses I'm looking at for rentals are generally 100,000 and under. Some of them are 150,000 and under, depending on where you're looking. Um, it's just, that's kind of the market you want to be in. So you don't want to be in a market in California or Phoenix and those markets. You're not going to rent and cash flow properties there. Markets to target. As I said, avoid Arizona, Florida, California, and Las Vegas, the same markets that got pumped up before. Look to the Carolinas, look Indiana and Ohio. If you're looking for rental markets, look at Texas. Avoid like the plague New York right now, New Jersey. He had Ocasio-Cortez talking about home, not home ownership, but a home being a right over profits for a landlord. So just be careful. You're in New York, you're in some serious trouble. You're in New Jersey, you're in serious trouble. You don't want to own properties there. Anyway, that's it. I hope you enjoyed that. And leave your feedback. Thanks.